Forest traders, hello Forest traders. It's nice to have you today. Oh guys, we've been trading, but I've not been having time to post any video because of a lot of glitches here and there. Network has been bad, really bad. So guys, this is 18th of May 2025. This is you are welcome to our traders episode. This is Traders Talk Traders Focus episodes where we post, tell you what's going on in the ground, what are going, and guide you through on what you should be doing in the market, how you should be approaching the market, the right mindset. So, guys, I want to teach you my entry strategy. This strategy is mostly how to spot reversals, how to spot reversals, how to spot reversal. So guys, a lot of you think that once the market is in your S and R, which is your support and resistance environment, you just need to sell. If it's in a resistance, you sell. If it's in a support, you sell. Most times when you do that, you find out that sometimes the trade goes to your direction, sometimes it doesn't go to your direction. You tend to answer, you have to ask yourself, why? Sometimes it will take you out before going to your direction. Okay, I want to teach you how you avoid most times the stop hunt that usually happens. You enter a trade, not because you don't know the direction, but because you did not, the timing was wrong. So when you took the trade, the market took you out and still went to your predicted direction. So how do you avoid all of that? I want to give you a strategy that will help you to curtail, to filter all of those stop hunt opportunities. So that when you take your trade, the trade will just give you a smooth ride. Guys, it took me time to decipher this, and once you learn this, you master it, guys, you are going to be up there. I promise you. Now, before we move to the nitty-gritty of the video, please kindly like and subscribe to this channel. Please subscribe to this channel. I beg you, I beg you to forgive me not to be posting, not have to be posting videos lately. I've not been posting videos because a lot of things. I've been busy. But I try as much as I can to drop a video for you that will guide you through what is going on in the market. So, guys, we want to straightly move into the video. I want the video to be as short as possible so that you will be able to be guided and know what I want. So this is it. Share. Okay. Done. Think so. So you are welcome. You are welcome inside of my screen. This is Living on Forest, Life and Direct. This is where we tell you what is going in the market. So guys, how can you how can you predict reversals? How can you predict reversals and enter the market in the right timing? Okay, so there's something I'm going to teach you today. So let's move to gold. Let's move to gold. So that you'll be able to know how to predict reversal, when to know that a support and resistance is going to hold, and then the market is going to reverse from that point. Now, the first criteria, there is 4 criteria I want you to understand if you want to trade this strategy. 4 things you need to look out for. The first one is that the market must be on a clear trend. I don't want to hear that you say the market is a ranging market. I don't do this on a ranging market, please. Because some of you mistake a chopping market for a ranging market. So that you will not say you watch the video and it's not working. Guys, this thing works. This thing has been able to transform a lot of people's account. This thing has been able to transform my account. So it works, guys. So your first criteria is to do it on a clear trend. The market must be on a clear trend. What I mean, it must be a bullish or a bearish trend for this strategy to be very, very effective. Don't do it on a chopping market. 2, the second criteria is the discount must come in a support or a resistance area. Now, what I mean by discount, please take buying a bullish market to be bias and the selling market to be discount. I always tell you that you approach the trading like not lines, but approach it like a normal buying and selling business that you do in your marketplaces. The sell side is the discount. When the market is going down, is the dealer giving a discount. When the market is going up, is that buyers are buying. Okay, this is the two things I want you to understand. The sell side is the discount, while the bullish side is the buyers buying. So now, so when I mention discount, you'll be able to understand what I mean. The discount must come in on a support or a resistance area. Then the third criteria, there must be a discount with 100% retracement. I will explain all of that. So when the discount is coming, there must be 100% retracement. Then the fourth criteria, which is the last, is wait for a last push that holds, like a stop hunt. Okay, you wait for a last push. After you've identified that, wait for a last push. Be patient. So if you want to trade, you want to become profitable, as always, be patient. You have to be patient. Sometimes when I lose my trade, it's because I did not wait enough to filter all of that, and I take my trade and I find out losing those trades. So the market has taught me a lot, and I'm telling you, you have to wait for all of these things to align. But I tell you, when you're patient enough, when you put the trigger, it will be like magic that it will be as if the market is obeying you. You'll see your trade running in profit instantly. Even if it's going to do a little bit chop, it's going to bank. So guys, now let's move to the nitty-gritty. I want to show you an example of what I'm talking about. Now, this is gold, okay? Now let's go to 4 hours. Guys, this works on any time frame. Are we together? This market works on every time frame. This strategy works on every time frame. It depends on what you are trading. If you're a swing trader, you go to a higher time frame and do your analysis. Like I told you, I'm a swing trader. I do the top-down analysis, analyze the market. Then when I must analyze my graph, find my zones, then I come to a lower time frame to pull my trigger. So now, if you are a daily trader, a daily trader, do it on your time frame that you choose. So in this case now, let's assume that you are a day trader. Identify the trend of the market. Now, if you look at gold, this is gold, what we have here, and this is a 4-hour chart. Mind you, this works in all time frame. So you not say, he did it with 4 hours. It will not work in other hours. It works because it's the natural dynamics of the market. The whole thing in forex is buying and selling. The same thing that happens in your general market. So now, the market must be on a clear trend. And what we are seeing here is a bearish trend, okay? Look at here. And then this one that looks like bullish is just a discount from this, okay? It's a retracement of this because it did not take out this high. So the market is still on a sell side. So this is a clear downtrend. As you can see, the wave going down, impulsive retracement, impulsive. You see the waves. Now, we have identified, number one, the market must be on a clear trend. This is a clear downtrend. Now, the second is the discount must come in on a support or resistance environment. So when you have drawn your support and resistance environment, wait for the market to come to your support, in this downtrend now. So we are waiting for the market to come to a resistance point before selling. But what we will not just enter a sell because the market is in a resistance point. Guys, if you do that, it's gonna burn you. It's gonna burn you. You will be burnt. So you have to decipher things to see that, yes, my trend has resumed. Then you can jump on it. And when you jump on it, you are trading in line with the big boys and you're going to make money. So now, I'm jacked up because I'm telling you what works. So after watching this video, go and rehearse it. Look at the market. You will be shocked at what you will see. I'm telling you. Now, the market is on a strong trend. You wait for the market to come to your support and resistance. This is the criteria number 2. Wait for the market to come to your support and resistance area. Now, this is all this place, the red line is our support and resistance. The market has broken this, market has broken. So assuming you've seen this market and you want to enter this trade, what do you do? Now, the market came up down to here, and then the market has started reversing, okay? Now, because you are looking for a sell, you're not going to buy because the market is going bullish. Wait for the market to come up to your resistance point. Then you look at sell opportunities. So at this point, the market has moved and the market came into our resistance point. It came into our resistance points. As you can see, the market is now in our resistance point. So what did the market do when it touched there? Look at what it did. it respected it, came down, and this is a 4-hour evening star candle. Now, should you pull the trigger yet? You still wait. You come down to 2-hour time frame. Okay, let's go to 15-minute time frame. Now, this is where the market goes. Now, watch. The third criteria is there must be a discount with 100% retracement. Now, you've confirmed in 4 hours. 4 hours have given you the evening star. You've confirmed in 4 hours. 4 hours respected this thing a bit. But you shouldn't pull the trigger, because if you look at this, if you look at this here, sorry, the resistance, if you look at it here, let me remove this stuff here so you see it clearly. Okay, let me use another. It seems this one is okay. Okay, now. Okay, this is another chart. This is the 4-hour environment. So this is the evening star. 1, 2, 3. This is the evening star candle. Now you saw the market respected it. But if you look at the way the market was going towards your direction, it was aggressive. Look at this aggressive green candles. 1, 2, 3, 4. Aggressive towards that area. So in 4 hours, it's showing aggressive. So you shouldn't touch it when you see aggressive. But when the market actually hit the resistance, look at the indecision candle formed, the market started slowing down. And what happened? This bearish candle appeared and closed, forming an evening star. Now, you come to your 15-minute time frame or your lower time frame. What do? Observe it now, how the market moves towards that direction. Now, watch. The way the market was going toward the direction, even if we use a 1-hour candle, let's see 1-hour candle. Now, if you watch the way the market was going towards that direction, see those green candles. Guys, when you see this move, these moves are not aggressive. When we mean aggressive candle, we need candles that are as big as this. You see this one? You see how big it is? You see this one? You see this one? These are aggressive candles. This candle indicates that this is where the big boys are trading. But when you see candles, small candles moving towards, in fact, as it's getting closer to your resistance, it's becoming more smaller. Look at this. When it started, it's a little bit big. But after these two, when it started getting close to the resistance, you see this small candle. When you see this happening, know that resistance will hold. I've been preaching this all through. It's going to hold. It's going to hold, because if that is the direction of the market, you'll be seeing aggressive candles. So observe that the buyers are not willing to pay more for that price, are not willing to pay more for that currency or for that commodity, whatever it is. It's normal in the general market. If a dealer has a shop dealer has a product, and he wants to sell this product, and people are not coming in to buy, he's telling it, but few persons are coming. What happens? He will give a discount, okay? Because people are not. But if he put this product, let's say he put this product at $1 price, and then you see like 50 persons, give it to me. Once you see that aggressive candles coming in, just know that there is a shortage. A lot of people want to get the product, but the product is not enough to saturate or to circulate for all of them. So what happened? There is going to be a surge. Everybody will be dragging, give it to me, and then you see the price pulling aggressively to the upside. But in this case, that is not happening, because you see the price chop, slow movement towards the resistance. Know that people are not willing to buy. Even when the discount comes in small, the buying is not aggressive. So that is one indication that when I see it, I know that this discount, this resistance, or this support is going to hold. So what I will do, I will relax and observe the market. What happens when the market gets to the resistance zone? What happens? That's number one thing. Now, the number two thing, discount must come in. So we want to wait for the discount. So let's come to a 15 minutes time frame and observe this very well. Look at, now you are not filtering it deep, looking at it deep. You look at it from the higher time frame coming down. They are all aligning. So this 15-minute time frame is like you are using microscope to filter it the more. Now, look at what happened when the market came there. You see all this neckline. You see the candles are not aggressive. It retraced, it came, give discount, and then On getting close to the resistance, chop, 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 chop. See those small candles. That when market did, it did behave that it want to break. This one is to take out all those junk traders who will say, market has broken resistance. Buy, 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 buy. And then it came down. Now, when it start coming down, the candles that is using to come down is bigger than the one that went up. That is where? That is one criteria. You see, drops. Then you now saw the next buy candle that came in did not do anything. And then the market pull again towards the resistance. And what happened now? The candles are becoming bigger. You see what is going on? See, look at this candle here. It's becoming bigger and it engulfed this one. In fact, this one candle took out 1, 2. It took 2 candles to get to that upside, but it took 1 candle to swipe all of that out. And if you look at the candle, this candle is bigger than these 3 candles. Just 1 candle. Now, 2 candles now. You see these 2 candles? They are bigger than these 2 candles. So the market swiped down. Whoa. When you see this, you know that the big boys are coming in. But they've not started putting the big orders, the big triggers. Okay? So you saw how the market moved. Now we've gotten our 100%. There must be a discount with a 100% retracement. This is the discount. 100%. Because the market was going up. Now this is even more than 100%. Now, what should you do? Haven't gotten that. You will now wait for a last push towards the upside as if you want to go up. That could not do anything. It now drop. So it's like, go up, but I can't go up. I die. When it goes up, it rejects. That last push, that is your confirmation that it is holding. So what then happened? Look at then, when the green candles came, it could not do anything. Look at this candle. Look at this candle. Swipe that. Okay? Now, the market starts coming in again. But as the market is coming up again, look at what is happening. The candles are not still aggressive. So when it goes here, it retraces, it got here. When it behaves as if it wants to become big, these 2 candles swipe it out. So now, guys, any trade you take around this environment, after this last up and then swipe, if you go to 30 minutes candle, this will be like a rejection, a pin bar. Let's go. So you see that pin bar there? You see it? It's the pin bar there, rejection. So any trade you take in that environment, you are good to go. Okay? So, but me, when I traded this pair, I did not catch this trade here. So I observed it again. Now, the market came back in this environment. As it's coming back, it did a last touch. So when the market did this stuff here, rejected, that was when I pulled my trigger. Let me take out this stuff here. Okay? So the market came and fell, and then came and did this. So once the market is doing this consolidation, this environment is where you want to take your trade. When you take your trade, guys, your trade will just run in profit. And this is where I took my trade. Because when I saw, I did not see it here. I missed it. But then when the market came, did this stuff, I've already observed the story behind everything that happened. And I saw the flow. I know that this market is a sell. So for me to just want to enter, I want to look at that push to the up and die. Then you see, I took this trade here. When the market pushed to the up but could not do anything, and then all of these pins, I took the trade and the market fell like knife. Okay? And the market fell down. So guys, understand the story behind it. And if you look at the structure, this is when you start seeing head and shoulders. This, you see this head, this is the head, this is the left shoulder, this is the right shoulder. And then it came back to test this right shoulder again and then drop. That is where I put my trigger. Let me go to it. You see, very well. This is what I was looking for. Now you see the left shoulder, head, right shoulder, and then the market dropped. Then I did not take this trade here. But something happened. I was waiting for that last push that said, I want to go up. I cannot go up. I die. I want to go up. I cannot go up. I die. And that is what happened here. The market came. And I want to go up. I want to go up and get aggressive at least you want to break this right shoulder. And then what happened? the market collapsed. At the end of the 30-minute candle, it collapsed. Immediately, I took my trade here, and the trade was no brainer. See, after here, I see what happened. The market fell. This is where I put my trigger. So you see that this thing worked perfectly. In fact, taking your trade here now has made you filter all those stop hunt, all those crazy, because they've done the stop hunt. They did it here when the market broke this resistance for those breaker traders. They did it here. Those who they buy, and then after they bought, the market bought a little bit and then swiped all of them out. Now they came and did it when they noticed that with this aggressive candle here, we look at this aggressive candle off of that environment. You know that the sell side is certain. The big boys is back because of this aggressive candle. The big boys is back. So when the big boy is back, what you want to do is you want to look at where you enter in a safe. Now the market came drop, and then once you identify that the big boy is back, wait for the last push that will do as if it's coming up but could not go up. I die. After that candle, that is the stop hunt. You pull your trigger, then your trade is going to run in massive profit. So when this market came here, I was waiting for that last push. I heard them patiently. I was working, but this is gold. You trade anyhow, you're going to be burned. So I waited, and then that last push came. So when I saw the buy was strong. I said, whoa, this candle was strong. Could it be stop on? I relaxed. I watched it in this environment, this shoulders environment, in this head and shoulder structure. This is the shoulder, head, left shoulder, right shoulder. It came back to the right shoulder. Now, this thing now came and took out the people who entered there for a sell. It hunted all of them down, and at the end of the trade, it pulled, it swiped them. At this point, I took my trade, and the market banked. My TP was around here. Before it could even get here, my TP was smashed, and I made over 5,000 pips. Some people may call it 50 pips in gold, 5,000 pips drop. Now, this is what you should do. This is how you read reversal. So let me now go to another trade, trade, of course, Euro USD. Now watch. Euro USD. What trend is it? This is a downtrend. This is a downtrend. Okay. Now, this is our support that turned resistant at the break of this. Now the market now start coming. The market start coming aggressively buying. After breaking it, the market starts coming. Now, as the market is coming to our resistant environment, which is our resistant environment, what did it do? It was coming aggressively. It started coming small. Now it became aggressive. But at this point, when it's getting close to the resistance, it became small. Look at those small candles. Those small candles. But another big candle, another aggressive candle came in, boom, and broke it. But then what happened? It go up a little bit, it fell, and then form an evening star. Now, you ask yourself, if people want to buy, why would the dealer keep giving discounts? If you want to buy, imagine you have a store and you fix your product at $5. And people are willing, give it to me. They are even dragging, go outside of the store. A lot of crowd is there, give it to me. Everybody, this one is starting giving. I'm ready to pay. Give it to me. Will you want to give discounts? It will be crazy for you to give discounts. All of you want to buy for $5. Okay, don't worry, I will give you discount of $3. Who does that in business? No. You only give discount when people are not willing to buy at that price. You will give discount so that you see people who want to buy. But at this point, people are dragging. They want to buy something, are willing to pay more. There's no need for you to give discount. But so that's why when you see the trade going up and you see another aggressive candle, one aggressive candle goes up, another aggressive candle come down. That should tell you something. Why did they give this? Why did the dealer give that aggressive discount? It shows that people are not willing to buy. So when you see this in the resistant area, you do it only on SNRs for you to be very effective. So when you see this push up and push down with these two current, you ask yourself, oh, the dealer gave discount aggressively. Why? That means people are not willing to buy. So you got to one hint that this resistance is going to hold. Observe what happens next. The story that happens next will now help you to know when to enter your trade. Now, after the discount, another buy came in, but then it came and touched the resistance point and then could not go up and break it and drop. You see the next candle drop. And this highs is not equal to this high. So what we are seeing now is making a higher high, higher low now. This high is not even up to this. So the next red candle came in and dropped. And then it came again up. And what happened? Started consolidating in that environment. And then the big boys started pulling their trigger little by little, and then they became aggressive. Woo! So you see, I call out this trade on my. I told my mentees that this market is going to fall. Euro USD is going to fall in this region because of the behavior I saw before. So this is how to read the market in an S and R. So now the market now, after giving this, after you see this small consolidation in that environment, this is where some of them I told them to short. But because I was already on the go trade, I did not took this trade. But those who took it made profit. Now you see that aggressive candle that wiped everything out. Took out this low, took out this environment. So the market has come up now, green. What this is telling you now is just a retracement, a retest to this this environment. The market is coming to retest this environment. This environment. So forget this green candle you see here, thinking that it's going to buy. It's not buy. It's just a retest to that. The market is going to fall. Or the open of this market on Monday, is this market is going to, are you seeing what is going on there? So what you will do now, because this candle is a little bit big, wait, don't just pull to the trigger when the market opens. Observe, wait for a push up and a push down. Okay, aggressive push down, bigger than the push up, then or engulfing it, showing that the big boys are back. They have respected in this environment. They have retouched it. So for my speculation, Euro USD is going to touch, it's going to break a little bit this environment, this red line I put, because it formed support here several times. So it's going to do a little bit breakout and then drop aggressively back in. That is the stop hunt. That is what you should be waiting for to sell this stock, and you're going to sell and make profits because the market has already did the story in all of this. So you see how we were able to read the story from the beginning, the flow. The market broke, entered back, discount. It tells you, dealer giving discount. What is it telling me? Could it be that people are not willing to buy again? People are not willing to pay higher on this price? Now, the next time they came to that, they pulled as if aggressively and then pull back again. This is a second brainer, a second tip that tells you that this resistance is holding. Because the last time they broke it, they could not do anything. They came back aggressively, 100% retracing. And then the next time they came in, they did another thing, 100% retracing. This is the third time they went and touched that place. And then they collapsed. They did it 1, 2, 3, and then the fourth time. So the number of times this place is holding is telling you that sellers are there and they are ready to push the market. The fourth time the market came and touched that, what happened? The market never near there again. And then the big boys start putting their trade. So when you see these aggressive candles, know that this is the big boys. This is the trend of the big boys. This is where they are going. Now the market has fallen. And then we now see this discount coming in because we are now on the sell side. We now see this discount coming in. You look at this aggressive and you say, the market wants to come and the market will likely not come and test this zone again. I'm 80% certain that this market is not coming here to test here again. The only thing I was expecting is that the market will come, it might break this red line, come a little bit in this environment, retest it, and drop aggressively. So when you see that happen, dropping that aggressively, kindly pull your trade. Don't be scared. This market is going to collapse. It's going to fall. The same thing is going to happen in gold. Gold is coming up aggressively, but it's coming to an environment. So you wait for the market to come to this S&R and observe what happens. So if the market comes on getting close to this environment, it started going small, the candles become smaller than the previous candles, then know that this place is going to hold. This will not align with the Euro USD, because if Euro USD is selling, gold should be selling. Okay, but we know that this trend is general sell trend. Now, the last pair I want to talk about is USD CHF. USD CHF. Now, if you want USD CHF, is in a clear, this is the daily time frame. This market is in a clear downtrend. which you can see very well. The market is going higher, higher, lows, higher, high, and drop. And then after it broke the support, which now is now a resistance, look at what the market do. Look at this aggressive candle that came in. So when you see this towards your resistance or your support, don't touch it, please. It's going to burn you. This is an aggressive candle. Relax and observe. And then the market drop. When the market drop, you ask yourself, why did they give discount? Although this is not 100% discount, but this is like a 70% to 75% discount. And then the market came down, rejected, and started going back up. But then this time around, as it's going back up, is this move equal to this green strong move here? No. They are now going chop, 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 small moves, snake-like move. And then they broke it. They broke the resistance, right? This is to wipe out these breaker traders. The market has broken resistance. Let's buy. And then they bought a little bit, and then they came back there. Now they are in that resistance. So what is going to happen? You wait and observe the markets. But from the way I see the behavior, and I'm not seeing any aggressive candles, I am 80% certain that this market is going to break down here. And once that breakdown happens, wait for a retest in this environment and start selling. The market is going to sell. So AUD chef is going to sell this week. It's going to sell because one, it has done the stock hunt it wants to do, and now it's ready to go down. If you look at the 4-hour time frame, the same thing happened. You see the breakouts. It looks strong. Then it started pulling the trigger. The same behavior you saw on good. When you started pulling the candle will be small, as it's small, getting bigger, boom. You see that exploding candle. You see how it's coming small, and then you see this stuff here. This rejection is like a stop hunt, and it's like the head and shoulder structures. Look at the head, look at this, look at the shoulder. Okay, so I see this pattern everywhere, and they always show you to you. See head, shoulder. See that retest, and then the candle became aggressive. When the big boys want to enter a trade, they will first of all stop hunt, take out all those junk traders, and they start pulling the trigger. And when they start pulling the trigger, you will see the candle sizes will change. The candle size will become big and aggressive. And you see this big candle, it drop. It took 1, 2, 3, 4, 5, 6 candles before a green candle should even appear. And then when the green candle came, it said as if it came aggressively. The next one was not even aggressive again. And then you see that pin bar. The market is going to drop. So USD, AUD chef is going to drop. So this is how we're able to read the market. You read the dynamics of the market. You read the flow. You are going to be predicting the market with 97% accuracy. You're going. Sometimes I will just look at it and tell my mentees that this market is going to reverse. They will say how, and at the end of the day, the market will reverse. How did you know? This is how you were able to read the market. When you read the market from the story. Now, if you look higher high, higher low, higher high, higher low, higher high. Now it broke. It could not do another highs. It dropped. Higher high, lower high. What we want to have is lower low again. So you see the flow. The highs, this high could not take up this high. So the dynamics has changed. So you see the flow, the way it's going, and this is a V formation. V, you draw the V like this. This is a V. You see that V. So you see that V. This is a V formation. So the market has respected it and is about to go down. So I've given you this trade early enough for you to go and look at it. It has formed a structure, head and shoulder, outside the resistance environment, and it's going to break. So it's using the resistance environment as the neckline of the structure. And once it breaks that resistance, wait for a retest. Once it breaks down, observe how if the candles became aggressive and broke it down, wait for a retest, and then you sell. This is how you're able to read the market with high accuracy. This is how you're able to read reversals, and then you are good to go. So when you do this, you predict with high accuracy your trade. Another trade I want you to look at is GPP JPY. GPP JPY, if you look at the general trend, it seems the trend has reversed. Okay, in a 4-hour time frame, we are having a structure that is forming, head and shoulder structure with an M formation at the top. If you change this to be a line chart, you will see the M. Look at this M formation, massive, and then the market is in the right shoulder, and it's about to form another M formation. So the market has officially reversed. GBP JPY is going to sell this week. It's going to sell, and the move is just starting. So we saw this move here, aggressive. You see how aggressive these candles were? This can another aggressive higher highs. Okay, then we see that sell breaking off these lows and taking off out, breaking out these lows again. So it has changed. The dynamics has changed, and we can now see that this is forming a head and shoulder structure. So it is in the right shoulder right now. So what should you do now? Come this week. If you look at the 1-hour time frame, you will see how it made the behavior it did. When you get to that, look at the resistance point. Look at how it was playing around. Anytime it gets there, it rejects, and then you see this, it rejects. Now you see these 3 candles, 1, 2, 3, 4, small 3 candles. But when one red candle came, it wiped what one. This is 1, 2, 3, 4, 5, 6 candles. One candle did what 6 candles did. So what we should be looking at is time and speed. How long did the market get from this zone to this zone? How fast did it? It might get from this zone. Imagine somebody running from let's say Lagos to Port Harcourt in 3 months. You say, oh, okay. You know Lagos to Port Harcourt, how many months? 3 months. Oh, okay. Because you hear it's 3 months. The time he took to run from Lagos to Port Harcourt is 3 months. So, okay, it's normal. He can do it. But if you see somebody run from Lagos to Port Harcourt in 2 hours, whoa, everybody say, whoa, what is that? Who is that? Who did that? The time, speed matters a lot in forex. So it took from this place to this place, yes. But how long did it take? This is 1 hour count. It took like 6 hours to be 1, 2, 3, 4, 5, 6 to run from this price to this price. From this price here, from this price to this price. It took 6 hours. But it just took 1 hour to run from there back to where it came from. That should tell you that something is happening. This count is strong. They still want to sell off. They are selling off. So the sell side is the trend. The sell side is where you want to be. Okay. So after this candle has born, this candle has closed, and the opening of the market, I feel that GBP JPY will start even flowing from Monday. So we want to wait for the last push to the upside that could not do anything. That is, I want to go up, I die. When we see that stop hunt, we are going for a sell, aggressive sell, and this is going to give us a good return of investment, because this market we will expect will sell from there. The market is going to break here. This is where this is coming to. So if we take our trigger from here, this market is going to bank from here to here. At least it's going to give us 250 pips, GBP JPY. It's going to sell 250 pips. So we are waiting for that last stop hunt that will come in this red bar. We're waiting for that last stop hunt that will come back here and fall aggressively with a pin bar. Then we know that the stop hunt that happened. We then pull our trigger. So guys, this is how far we'll go for this video. I think I've been able to guide you through on how to identify a reversal. Remember the 4 criteria for that I've taught you today in order for you to take this trade, for you to trade this strategy. 1, the market must be on a clear trend, which I've shown you. It must be either bullish or bearish side. The discount must come in on support or a resistance area. So the market must be in the support or resistance area for you to be able to take those trades, for you to be able to see the behavior, to read the dynamics of what happened and what is happening. And then 3, the market must be discount. There must be discount with 100% retracement. Those discounts must come in. Like this one now, it has given us a discount with 100% retracement. It came up. This is even more than 100%. So after that has happened, 3 criteria has been fulfilled in this trade. Just remaining 1, and which is what? Wait for a last push-up that holds. Last push-up, like a stop hunt that holds. Once this last criteria is met, this is where you should be on that trade. And I bet you that this trade is going to pay you very, very well. So thank you very much. So this week, GBP JPY, we are looking at sell. AUD CHF, we are looking at sell. USD, Euro USD, we are looking at sell. And then gold, we are looking for sell. But gold has not matured yet. Gold still have a long way to go. We still want to observe because we are seeing the push. It's not close to our SNR. The market must be close to our SNR for us to make a decision. And then from this candle I'm seeing here, it looks a little bit stronger from what it's doing before. So we wait. We want to see that small chop movement towards this environment. Then we know that, okay, this is going to hold. So thank you very much for this, for watching through to this video. I want you to like and subscribe if you like what we are doing here. Please like and subscribe. And if you like our channel, please keep sharing this channel to our friends and neighbors. This is Living on Forex. I always got your back. So guys, you are off of my screen. Please finally subscribe to this channel. Please share this channel, share this strategy. This is a free of charge strategy I'm giving to you. I just ran it through fastly. But for those who are mentoring, I've been able to guide them through. It takes time for you to learn this stuff, but it also needs patience. Guys, if you want to win in the forex business, don't go and put your money and start trading anyhow. You have to be patient too. You have to allow the market to tell you that I am going this way before you enter. Don't just enter because the market does not respect your line. The market is not seeing that your line. It's not about the line or the thing you draw that determines, or the market, you see a breakout in the trend line, you start selling or buying. Those things are not what is obtainable. Wait for the market to give you a goal, and then you are in. So thank you very much. I will now see you in the next video. I'm signing out. Peace out.